Good afternoon and welcome to this session for GTR. Should Saudi Arabia be considered the first port of call when it comes to digitalization in trade finance? Thank you very much for joining us, and hopefully we'll be having an interesting conversation on this subject this afternoon as Saudi Arabia strives to become an important logistical and trade hub for the region and globally, and certainly it's one of the Vision 2030 initiatives. Very few countries are as well placed geographically and in terms of the political ambition and drive to become a real port of call for trade finance and for logistics. So we'd like to talk this afternoon a little bit about where we are in that process, what more can be done. And I'm joined in that regard by a panel that is crossing across all of the realms of that, the financial side, the logistical side, from the government perspective and from the private and finance perspective. So I'd like to introduce the panel. We have, in no particular order, Aneta.
Hi, this is Aneta. I'm based in London. I work for LexisNexis Risk Solutions, and I'm the Director of Market Planning for Trade Compliance here at LexisNexis Risk Solutions.
Thanks, Aneta. Jamil?
Hi, I'm Jamil, the Chief Solutions Officer for Tabadul, providing logistical technical solutions for Saudi Arabia.
Thank you, Jamil. Salah?
Salah Idris, a banker by education, practice for quite a long time. I worked for Bank of Khartoum, Citibank, Saudi Hollandi Bank, NCB, and last bank was Saudi Investment Bank. And I'm very happy to be here with you. Thank you.
Wealth of experience there. Thank you, Salah. Huny?
Hi, good afternoon, everyone. I am working as the country head for Saudi Arabia and Bahrain. And before this, I was a global head of trade for SWIFT based out of Dubai. And prior to that, a banker with transaction banking and corporate banking experience. I work extensively with ICC and BAFT in the past and currently work with ICC UAE on many initiatives related to trade digitization in the industry. Thank you.
Thank you, Huny. And Hassan?
Hi, this is Syed Hassan. I'm head of trade finance at Gulf International Bank, based out of Bahrain, but I look after the entire region, Saudi, UAE, and GCC. Prior to that, I was MD of trade finance at Lloyds Bank London, Citigroup London. So this is my first stint in Middle East. Very happy to be part of the panel.
Great. No, thank you all very much for joining the panel. So as I mentioned at the outset, I mean, Saudi Arabia, as part of its vision initiatives, has this this drive to be a trade and logistical hub, banking on its geographical advantage in between Asia and Europe, and the size of the economy and the size of the potential workforce here. And a number of steps have been laid out in terms of the improvements that should take place. And Saudi Arabia is already well advanced in many of these in terms of digitalization, in terms of making the whole process more efficient for trade finance. But of course, we know that this really only works if it's done in a holistic manner. So getting all of the stakeholders involved, getting the banks, the ports, the customs, the non-bank entities, everybody involved in this digitalization. So to that end, Jamil, you're obviously very close to this. Could you give us a flavor for where Saudi Arabia is now, some of the initiatives that are underway, and just give us a sense of where we're up to?
Sure, thanks, Tron. Well, Saudi Arabia's digital ecosystem and the investment and growth in that area is significant, as I'm sure if you're familiar with Saudi Arabia as a region. Digitalization is all over the place, and logistics is just one of those kind of sectors. Just to kind of put into perspective, obviously Vision 2030 is one of the key initiatives of the country, of which logistics and international trade plays a large, significant role in terms of their vision and direction and so forth. Before I go into a little bit more detail, I just want to give you a little bit more of who we are and how we fit into the kind of picture. So Tabadul, as the company name, is not as much known as its own product. Fasah about go into that, but basically we're a systemically important trade logistics hub solution that is used by everybody in the country. We provide what is known in the trade as a single window. So it's your single window into bringing in, importing and exporting products into the country. The company was established under the name of Saudi EDI. So by its nature as a name, EDI being electronic data interchange, the concept is to bring all those entities together into a platform for exchanging information. So by royal decree, we've got all the stakeholders as part of the kind of members of this company, so as customs, ports, and so forth. Tabadul is a subsidiary of Elm, and Elm is a subsidiary of PIF, and Elm is again a software engineering company which has very specific kind of remit in that space. They have a little bit of logistic related items that we integrate and work with, but most people would come across them under the guise of FSHR, which is kind of the Ministry of Interior's kind of system. But just to just to put into context the kind of the importance of logistics for the country and how the government is pushing and investing in that space. So part of Vision 2030, there is the National Transportation and Logistics Strategy, which has approximately 300 billion SAR of potential investment, of which 2.5 billion is actual pure capex from IT perspective only. So that, you know, when we look at, you know, digitization is one aspect, but obviously when we talk about trade, it's not just technology. The objective is to actually lift ultimately how trade is measured in a country in terms of its logistics trade is the logistics performance index, and I'll talk about that very briefly in a second. But that is quite an important sort of note in that this is the kind of importance the country is putting in that particular space. So basically 13% compounded annual growth in terms of logistics IT alone, and 11% in terms of the actual spend growth in that space. 20% in logistics platforms. When we look at platforms, not just the actual software, but systems as a whole, with 16% spend growth. These are serious investments in that space. And you know, the country has been doing a lot of things in that space as a transaction. So you want to bring something in, you do one bit, and then somebody else does another bit, and so on. And there's a shift in mindset in terms of going towards a service-orientated approach. And that's where we come in, and I'll talk about that further. But when we talk about sort of businesses like e-commerce, it's still at its infancy in this country in relative terms when we compare it to, say, North America and Europe, and Amazon, Souk, etc. They're all here, but the growth is nowhere near sort of where it is in other places. That just gives you, just that segment shows you that potential growth in that area is massive, and that growth needs the infrastructure and the digitization to support it from there. So the momentum is there, and to actually do it as efficiently as possible, we need to talk about operational efficiencies. And to do that, digital transformation is where we're at. So just to sort of put into context of where Saudi Arabia fits into the rest of the world, there's something called a Logistics Performance Index, which is published by the IMF. And the last one was in 2018, and I think there's one due soon, where if I just put into context, you've got Germany, which is #1 in the ranking there. In 2007, 10 years ago, Singapore was #1. Now Singapore is #7. The UK is #9 currently, and so forth. Now Emirates, they're #11. So that's pretty amazing for you know, a country of its size. However, when we look at Saudi, we're #55 at the moment, but that was, I said, in 2018. But with the investment that's happened over the last 5 years, 3 years, and continuing on from there, that is going to change quite quickly, and we're going to see that number jump next time they do one, and 5 years after that. So, you know, trade is the, you know, the catalyst of sort of movement of products around the world. Now, modern supply chains rely on digital capabilities and connected systems. If they're not there, we can't transact. And, you know, back in the day, we talk about, you know, telex. Back in the day, it's not long ago. I mean, we're talking about what, 30 years ago? Back in the day, I used to work for a company called Cable and Wireless, and we used to charge people for telex on maritime transatlantic through satellites. But that's not long ago, and that is transformation. Now the transformation is so much faster. So not all systems are created equal, and that's where FASEH, the product of Tabadul, fits in. So to make international trade work faster, better, more efficient, and to be able to take maybe, say, shocks in the system like we've seen recently, is to have that tighter coupling across various digital platforms. Trade logistics historically has been a fragmented market, and with digitization, it brings it together. They don't physically have to be all in the same company, but because of integration, that's where it kind of brings it all holistically into one place. At the end of the day, the customer, doesn't matter where you are as a customer, definition of customer in the supply chain, everyone expects a better price, efficiency, obviously customer services, transparency, and traceability. Those are kind of drivers for us as a business that we provide the solutions to other areas. So digitization is in our blood. From the Saudi Arabia perspective, we have a product called FASEH. And unless you are living in Saudi Arabia and importing something, whether it be it your own personal items or you're trading, you would use this particular platform. For us, we look at users, and those users are the customs, the port and port operators, traders, which is what we are considered as traders, as well as the people who are just generally importing food and so forth. Freight forwarders, shipping agents, and we've got about 20 plus other government agencies. Those government agencies are spread across from private labs where they get to test the food products that you brought in, for example, which sit in a customs holding area, and then samples are taken away, and then that information comes back, all the way down to the Food and Drugs Authority that basically is the regulator in the country. So we have one platform, so that's one single window into the actual trade environment. We take that and we lumped truck management on top of it. So trucks are coming in on all the borders, and from Dubai, from Bahrain, etc. And ships come along and they bring in their containers, and basically containers move in and out. So that's where our platform takes it to the next level. We control the gates and barriers in those ports, but you can't just willy-nilly just drive into there. You actually have to take appointments on our platform. So we do appointment management. That appointment management is not as simple as just booking a time slot. We actually verify the drivers and the vehicles in terms of compliance and so forth. Thousands and thousands of appointments made every day. And that next step is into fleet management. So we can offer that to all our customers in that space. So that's the trade engine that we have that the country's been using for quite some time. And our board is made out of stakeholders, and the stakeholders are customs, the Ports Authority, and so on, who basically all contribute to our sort of direction in terms of either small or large transformational change. Just to put it into numbers, we've got about, I don't know, say 70,000 odd users on the system. This year, we're close to 14, nearly 15 million transactions on our platform. Transactions could be anything from booking for entry into a port all the way to a declaration submission. 3-point-something million declarations, 11.5 manifests, 3 million appointments for trucks to come in and go in and out of the country. And we have something, just 750,000 transactions with something called FASEH Pay, which brings me to the next aspect of the actual platform. So we help trade move in the country. And then what we do is we help all the parties connected on our system to transact. So if a ship comes along, container comes along, so you've got basically the port operator who ships containers and so on, they need to bill the actual shipping agent. That happens on our platform as well. So electronically, it's digital, they raise an invoice on our platform and they can pay through credit card or SABB and stuff like that. So that's just one example of
Jamil, and while we're on that subject, can I ask where you are with acceptance of digital documents, e-bill of lading and so on?
Sure, they are all electronic in one form or shape. So they are either scanned digitized and then uploaded into the digital world, or they come to us in electronic format. That depends on the party that we're dealing with. So as I said, not all systems and not all parties are created equal. So there are those kind of things, sort of levels of maturity. However, the flow within that space does work electronically.
So Saudi Arabia in a position now to start to accept digital documentation, digital documents of title, such as the e-bill of lading?
I think they're getting there. We're nearly there. So there's a couple more steps that we need to do to get that to be 100% because of the disparate different systems. But as a journey, we're pretty much there. Is that next step? And as you said, it's to do with the stakeholders as well. How ready are some stakeholders to accept and so on in terms of legal acceptance of something? Accepting it
absolutely
is the easy part, but for them to take it on as a legal acceptance is another side. So
exactly, and that's a fundamental part, isn't it? You can have, and we alluded to at the start, you have to have the whole ecosystem there. So you can have the platforms, the digital side of things, but you need to have the legal infrastructure there as well. Jamil, thank you very much for that overview. I think it's clear from what you're saying that there's good progress being made there. And I'd just like to now go over to Syed Hassan, looking at it from a bank perspective. And now obviously I'm at a bank as well, and we're probably in two of the top digital banks in the region. So I'd be very interested to get your view on where you see how you see this from the bank perspective and from the financial institution perspective.
Yeah, Sean, obviously both work in the same domain. And I agree with Jamil. I've also seen a whole lot of improvement in digitizations, but particularly last year. And where trade finance, and I usually divide trade finance into two parts. One is a traditional business, which we all have, about LCs and guarantees, which was mainly a kind of a manual, and we tried to automate it, but not all of it. We were just automating, or pre-COVID automating to an extent, just the channels, and channel automation was actually meant and understood to be fully automated. However, what COVID last year has basically, what we learned from them, that that's not the true definition. And while in Saudi, we see a lot of improvement, a lot of banks working, investing a lot in digitizing these. So the other part of the trade is obviously the structured trade part, which is supply chain finance and receivables, which was relatively new business. Hence, I would say it has achieved STP, full straight through processing. Particularly coming to Saudi, the improvement was immense. However, it was all in silos. We were doing something, the other banks were also, and they were not, exchanging notes. So there were no data points to compare notes and learn from each other. And as such, we all embarked on a journey separately to ourselves, what we understood. So that's what we see. So a lot has been achieved because a lot was due to be done. And now I think, the roadblock, the most prominent roadblock is the harmonization. Again, in traditional trade, our systems and processes don't speak to each other. Whereas, on the newer product, the structured trade part, we have the plug and play, things which can connect certain banks. Funders can automatically get connected. Other banks can come in and obviously, fund each other's transaction, but that's missing. That's also missing because, as a country, yes, Jamil is right. We came a long way, but there's a lot to be done on the regulation part, and regulation is something which drives the overall harmonization. As you rightly said, bills of lading, it's acceptable, not acceptable. There are a lot of question marks, and they all revolve around legislation. It's not legally acceptable, then most banks will not, or most companies will not accept it. And that's where we see. However, you compare us, there's a lot to be done, which obviously, everybody's speeding up. If we compare ourselves, let's say with UAE, when it comes to digitization, or at least digital take up from the clients, we see we are halfway behind. Obviously not from Europe, but obviously within UAE in the Middle East. So it's a good progress. However, there's a lot to be done. Another point is obviously the new channel. So I can take one example of, let's say, Swift for Corporate 7798. There are still few take-ups. There are, obviously you're one of them, very few number of banks who support that. And yet, again, corporates are also looking into these. So these are all new things. How acceptable to those? I'm very optimistic, because what I've seen lately, organizations, corporates are driving this digitization. And as such, banks are following them, and the requirements are changing. Government is fully supportive. And I wish and I hope that, we would have the legislation very soon. As a regulation, from the regulatory perspective, there's a lot going on in UAE, essentially, where, they are coming up with supporting the digital bank, especially the trade bank. And I've been hearing that, Saudi would be next. So it's a lot to be done, and obviously great progress so far from bank perspective.
Yeah, no, I think I would agree with all of that. It's that harmonization. It's getting the framework in place to allow all these digital initiatives to succeed. So I think we're probably pretty much aligned on that. Huny, from that harmonization is something that is not just a local Saudi issue. It's something that's being talked about, of course, across the globe in terms of harmonization of rules of digital trade. And harmonization is one of the kind of the buzzwords, right? So obviously you're sitting at Swift and looking at this whole environment, this whole global environment. What are you seeing from a global perspective, and how do you think that could be translated into Saudi? Is there anything that that can be done from an international level to support Saudi Arabia's journey here, or can Saudi help to support the international journey by being proactive in this space? What are you seeing?
Thanks for the question, Sean. I think what we have established so far, from comments from Jamil, from a trade engine perspective, we call it a trade engine. I like that terminology very well. And then Hassan spoke about the bank's angle. But we realize there is a lot of disparity between various jurisdictions, as well as within the same country. The processes and the standards could vary. So look at the legal harmonization piece, and I'll speak about the standards a little later. But speaking about legal harmonization piece, I think it is one of the key enablers for adoption of digital trade. You asked, Jamil, the question about whether we accept e-bills of lading in Saudi Arabia, which the legal structure for that is not yet enabled. But if you look at some of the other markets in the region, Bahrain, for example, adopted the MLETR, the Model Law for Electronic Transferable Records, by UNCITRAL in 2020. Singapore has enabled it. We have UK currently working on it as well. We have seen Abu Dhabi through ADGM earlier this year. So there are jurisdictions which are actually already live with this. There is also a commitment by G7 to lobby for this and promote the adoption of standard laws for trade documents as well. So, with that kind of momentum, and this only started in 2017, it's not a very old law which is getting adopted now. The momentum has just started now, and I expect in the next 5 to 10 years, a large number of the trading nations would enable or adopt these laws. At the same time, we have to realize that though we've been talking about trade digitization for 15, 20 years as an banking industry, the real impetus has been in the last 5 to 7 years with growth of fintech, not just in trade, but also in the areas of insurance, payments, compliance, regulation, etc. So that has been quite an enabler in terms of shifting of mindset, shifting of adoption rates, shifting of investment, because unless there is enough money put behind these initiatives, nothing can be achieved. And I have not seen globally level at the level of governments and customs, etc. The corporates themselves have really realized the urgency to adopt, especially because of COVID-19 pandemic. Last year, for example, we saw the global rates of trade over SWIFT network, and we support over $2 trillion in trade through documentary trade. It dropped by 11%. However, the adoption of corporate trade digitization through MT798 that Hassan referred actually grew by 72%. So in a scenario where the overall global trade is declining with double digits, we are growing the adoption of digitization at a much higher pace. So that kind of, and again, I'll refer back to Jamil's point that customer is what at the center of all this is. So if the customer demands higher digitization, I see banks full suit. I see governments enabling laws to enact the same, and other players in the industry or in the trade engine all working together to achieve it. So the future looks bright. We are finally making progress from a legal harmonization point of view, and we should get there soon. Now, coming to Saudi Arabia, I think this is a call for action for the Saudi Arabian regulators as well as the legal community to work on this with the industry, which is very keen to see these come to life. And more the number of jurisdictions adopting the model laws, easier it becomes to enact these cross-border transactions, because this cannot happen only in one jurisdiction unless we have enough number trading partners adopting the same law or harmonizing the law. We will not see the uptake in real life.
Yeah, and I think that's a very good point, and I'm sure with all of the drive towards making Saudi this logistics and trade hub, I'm sure that this will be a big part of it, because obviously the digitalization of trade finance brings with it huge efficiencies, and it brings with it the reduction in risk. Certainly from a banker's perspective and a trade finance perspective, it gives us much greater visibility into the entire trade flow, and it gives us more trigger points to finance international trade. So I'm sure that as you say, that call to arms will be heeded, and it'll help to drive things forward. I'd just like to come to Salah here, because we're talking about some of the advantages that digitalization brings, the efficiencies that we just discussed. And is there anything else from your perspective where you've been working with across many different banks and now into the fintech space? Is there anything else from your perspective that you see as an advantage of increased digitalization in trade finance? Thank you, Huny, for your input. Salah, you're on mute.
Yeah, no, sorry for that. Thank you again, Sean, and thanks to GTR for arranging and for organizing this important and timely event. Actually, digitalization in the trade finance, there is a group of deep experienced bankers, and with their deep knowledge and experience in the trade finance, they spotted a gap where the banks, where it is not covered at all in the banking and the trade finance and banking industry, whereby banks have done very well within their own systems, and in each country, the GTRS and the clearing houses are doing very well in connecting the banks within that country very well. SWIFT is connecting all of the banks together very well. But when it comes to trade finance and risk participation, the gap is there, and it was very well spotted by the founders, who are very seasoned bankers, all of them, and they came up with the trade assets to fill in that gap as the first trade finance e-marketplace that enables financial institutions worldwide to organize and distribute trade assets in an automated real-time environment. And it was built with the vision that it becomes the digital global space where banks can transact with each other without barriers, if I can say. So trade assets is neither digitalizing the trade finance at the transaction level, nor trying to replace SWIFT. It just created a global e-marketplace, as I said, to enable banks to communicate instantly and to price trade finance and the other bank-to-bank transaction digitally without picking the phones or sending tedious emails to each other.
Yeah, and I think this is one of the other hot topics in trade finance at the moment, isn't it? That how you get more liquidity and more financing into trade finance, and whether that's from the bank, the traditional bank investors, or outside of the traditional bank investors. And this is a good example, actually, of how the vision initiatives for Saudi can work and link together. So another one of the initiatives is to introduce more liquidity into the SME space and introduce more liquidity into local industry. And certainly by having the digital platforms and having more visibility into trade finance as an asset class, it can encourage more investment and bring more liquidity, but into the local companies, the local industry, and into the SME space as well. So I think there's once you start with the benefits of digitalizing trade finance, it really sort of filters down and expands and grows into the whole market. Yes. Thank you very much, Salah. And anything else you wanted to add to that?
Yes, actually, at the present, this information is shared only bilaterally, and trade assets will has enabled the Saudi banks. And by the way, we have 3 giant Saudi banks have joined this ecosystem and this platform, where we still look at the risk to join the platform and to build the momentum and to build the volumes through that. So now it is only handled manually and through telephone calls and emails and all of that to access the primary transaction, like letters of credits and financial financing and discounting guarantees. All of these are now being done manually.
No, good. It certainly brings a significant improvement in efficiency, as we've seen.
Yes.
Thus far, we've been talking about all of the benefits of digitalization. We've been talking about all of the efficiencies that it brings, all of the plus sides, basically. But as with any development, any kind of rapid change in a marketplace, there's new risks, and there's actors that are always ready to exploit those new opportunities and new risks that are arising. So Aneta, this is your area of speciality. Can you give us an outline for some of the new risks that you're seeing arising from this rapid digitalization? How can these be mitigated, and can that same digitalization be used to kind of mitigate the risks that are arising?
Thank you very much for that question. It's a very good question. So I would not like to start to say that actually, obviously we've been looking at the benefits of digitalization, and I still think it's hugely beneficial for every company to have a digital transformation program in place and going with the new modern era of addressing the markets. The way I'd like to put is the more effective compliance you have in place, it actually opens up new business opportunities. It mitigates obviously the risk on one side, but it's actually in the first place an opportunity to take a hard look on your compliance procedures and no longer look at it as a cost factor, but actually how can it help to even accelerate my business in that space. And I do believe that digitalization opens amazing opportunities to tap into new markets, addressing a new client audience, or bring products faster to that market. But this has a knock-on effect on the wider operation and also on compliance and a risk-based approach. I'm talking about in the context of financial crime here, more specifically for sanctions and KYC and all these procedures that are obviously falling under the financial crime here. What we very often observe, well, as a vendor in that space, is that the business side is in direct conflict with the compliance function of a company because, well, they have still the mutual objective of business growth. The business side really wants and has the desire to take that risk to expand into the new customer segments and to really open up this new product to the market, whereas the compliance officer usually says, whoa, let's stop here for a second and let's think about all the risks that are involved in this and let's take appropriate manner. But often they don't have the tools to manage it effectively, which really then stands in direct conflict with the business side. Another complex or another layer of complexity that digitalization brings, obviously as well to the operations, is that it increases speed and it increases volumes. Volumes where it be for obviously transactions or number of clients that you can onboard suddenly, and also types of clients that you can open your products up to. Now, when you think about the whole trade life cycle and how many parties interact during a whole trade life cycle, this again brings another complexity to that whole process and to the operations. So it is no longer just okay to look at the direct counterparties that you deal with, as in, for example, at best the exporter or the importer, but actually at all the players that interact with each other, because they all can pose a certain risk to your trade and your own business. According to a recent study that we actually recently run in the market, has actually shown that companies that were ahead of the game of digitalization experience less challenges and disruptions as well across the divisions and their businesses than companies that operate mainly manually, as in really the keyword is here COVID and the pandemic and how businesses operated here. I think Hassan actually elaborated on that earlier. Also another aspect that I wanted to bring up is that Saudi Arabia is often viewed as a higher risk to counterparties in the chain in the international context, especially due to its geographical positioning or position, and that puts actually the banks in Saudi Arabia at higher risk for de-risking as well. And then proving that you are actually doing the right things and have a robust compliance process in place doesn't help only your reputation, but actually proves that you're doing the right things. And it actually proves that you are worthy to work with them and that you are actually doing the right things and you're contributing to the wider chain.
No, absolutely. Is there a question here that all of the data that's coming out of trade, if you're digital, all of a sudden you're producing a lot of information, information on the flow of trade, and if all the banks are producing all of this information on the flows of trade, all of a sudden you have a neural network, you have a map with many points of reference as to who the counterparties are. And who's doing business with who, related parties, potentially U-turn payments, all of those things that we don't like, and all of those risks that are very common. The digitalization gives a much better view of all of those risks. Is that what you're talking about in this regard?
That absolutely, you hit the nail on the head. I think the data and that information is already there. It's just that in paper form, it obviously is not utilized, and its use is not maximized to the fullest, right? But actually digitalization brings it then to life and allows then not only draw the insights from all this information that is being collected, but also from the data that is being collected. You suddenly have tools that you can apply within the digitalization tools to actually streamline how you collect that data, what kind of data you collect, how you classify that data, how you distinguish that data, and it all helps you not only obviously for your wider operations, but and to draw actually business strategy and planning and all that stuff, but also compliance.
Yeah, there you go, and that's the balance, isn't it? That's the risk versus the business development side. You're covering off both of those points. I think that's something that you said very well at the start. It's not a them and us in terms of the compliance versus the business development. It's actually a complete picture and a very healthy, holistic way of approaching things. Yes, yeah. So we are drawing towards the end of our session, but we do have a number of questions that have come in from the audience. So we have a few of those we'd like to get to, and I'll throw them out to the panel. So please, panel, please feel free to jump in on these as you feel that they're on your area of expertise. The first one we've got is with regards to digitalization and how it can be used in Saudi Arabia to increase liquidity into the SME market. So I guess that was picking up on something that I'd briefly mentioned earlier in the call, and I'll take this one actually because it's something we're working quite closely with the Saudi Arabia on, and it's very much to do with some of the programs that are being put in place around from the government side actually in giving more transparency with regards to invoices that are due to SMEs. So there's digital platforms where we can see all of the approved invoices that are payable to certain payable by certain ministries, and it's because they're all digitally available and they're only on there once they've been accepted. You're removing the commercial dispute risk that makes it sometimes unattractive for banks to finance those invoices. You know that those invoices will in the time specified be paid, and we have very clear visibility into that. There's also other initiatives being supported by the authorities with regards to getting greater visibility of payments to SMEs, which again, as a bank, you love to have that visibility. It just gives you more opportunity to come in and step in and finance with greater confidence, which just makes it a lot easier. There's initiatives underway such as the SIDF, which is basically supporting payables to SMEs by way of a government guarantee as well. So there's a lot of initiatives underway linked to digitalization. This is what I was saying before. The vision initiatives are very cleverly linked. They're not islands. They're all kind of linked together to produce an overall goal. So the digitalization links to the SME funding, and it's very closely interweaved. Okay, now we've got a couple of questions after that on comparisons to other markets. So the first one is, how is Saudi looking to compete with Dubai? How do those two markets directly compare in the digital space, both in terms of ambition and actualization? And then the other one is, what level of digital cooperation is there between the Saudi market and financial centers like Singapore and Hong Kong, who are widely regarded as being the leaders in digitalization now? So maybe we could put those together. Given time, and does anyone have any view on how Saudi's comparing to those markets and how Saudi's cooperating with other markets?
I think it's an interesting question. Yeah, so Singapore has actually been the hotbed of fintech innovation as well as adoption of some of the enablers, whether it is creation of interoperability of all the markets which are in markets and players which are innovating in the area of trade finance, like trade finance platforms. We've had trade trust, which by IMDA, which is trying to create interoperability between various various platforms, and actually Swift is partnering with them. And we've also had, then I spoke about them adopting the model law for transferable records. So Singapore has been actually the leading light in this area, and they're working very aggressively. But as far as our region is concerned, I think the work I spoke about on the legal side, but even from digital standardization side, same IMDA and Trade Trust are working with someone like ADGM and many of the banks in UAE to trial the similar kind of interoperability and standardization across 2 different countries now, and not just in one market only. But Saudi, if you see, is actually from a Swift data perspective, is a leading country where the adoption of MT-700 for corporate usage is the highest actually. So that's a good example of digitization by large corporates in Saudi, and the pipeline for us is actually strong. That seems like an area where we will see more digitization. But I think a number of other initiatives which Jamil has already covered to some extent, and some legal adoption could actually give a massive push to the digitization of trade in Saudi. Jamil wanted to come in.
Great point there as well, but I just want to add to the fact that when we're comparing certain countries, we can't forget the fact that there's scale in the formula, and there's Dubai and then there's Saudi in terms of potential growth in that space. And for that growth to happen, it needs to move digital as fast as possible in every single aspect. But as soon as you start switching on all those little digital components, that scale will start to kick in, and the picture will be, a very healthy one.
That's a very good point, isn't it? It's a domino effect, and it should accelerate very, very quickly. From a private organization perspective, I mean, the cooperation with Singapore and Hong Kong naturally for SABB is very high because of our connectivity through HSBC. But also a lot of the fintechs with whom we're working in the digital trade space are based out of those markets. So we work very closely with both of those markets in terms of the developments that are coming out of there and their applicability into Saudi Arabia, and taking the best products and the best practice that's coming out of those markets. So from a private institution perspective, that's something we're very, very much aware of and very much focused on. So that's I guess one thing, but then that's different to a state-to-state level connectivity, I guess. Syed, Hassan, was there anything? Oh, sorry, Salah. Sorry.
Yeah, from my side, I see that though the number of banks in Saudi Arabia are not comparable with the number of banks in Dubai and UAE, but the size of the banks in Saudi Arabia are quite considerable. They are giants, and this is one thing. The other is that Saudi Arabia, being somebody in the industry of the fintech, I can see a lot of projects going on now in Saudi Arabia, and with this optimistic news about the amendments and the figures for the budget for 2023,
yeah, indeed, yeah,
24, we expect a lot of growth in that. And what is really impressive is the efforts and that the fintech companies in the Saudi Arabia are doing, because there is a lot of movement, a lot of in that space, where now the fintech companies are trying to cover up the gaps and the space between the end target clients, be them the consumers or the corporate clients, and connect them with the banks and do all of that outside work to the fintech activities. So that's where.
Yeah. Okay. Well, just moving on, because we've run a little bit over time, but we do have some quite interesting questions here. There's a couple relating to Salah while we've got you, and maybe just quickly answer these ones, because as I said, we're just a little bit over time. But the questions are asking. You were talking about the secondary market and trade finance earlier. What sort of secondary market is there here when it comes to trade asset distribution, and what's the role of funds, and how do those funds differ from any sort of global standard? How is the regulatory environment when it comes to institutional investors in trade finance in Saudi Arabia? So could you just give us a flavor for the secondary market here? A little bit off topic, but I think because we touched on it, I think it's raised quite a bit of interest from the audience.
Yeah, actually, when it comes to the secondary market, when some banks exhaust their credit lines and facilities with a specific country or with a specific bank, and then they own their own credit lines are full, then they need to participate those or sell them off to somebody who's interested in doing that.
Yeah. And this is well established in other markets, certainly. But I think the question is how. I mean, from my experience coming most recently from New York, where it's very well established practice, and there's institutional, and private investors in the asset class. I think the Saudi market is still, to my view anyway, it's quite nascent. There's still work to be done. I mean, you've got much more experience here than I do. But how do you see the regulatory environment when it comes to getting non-bank investors into trade assets here?
Trade assets through the trade asset platform, is non-banks and non-financial institutions are not yet onboarded for this, but it is a big space, and the company is thinking of adding those players.
Yeah. No, that's good, and certainly to bring that extra liquidity into trade finance would be very helpful. I mean, from a bank perspective, we at the moment we see that most banks in Saudi Arabia are participants into trade finance rather than distributing assets. I think because of the strength of balance sheets of the banks here and the liquidity position of banks here, we don't necessarily see the same real drive or need for balance sheet velocity that you see in other markets, perhaps. But I think it's definitely one to watch out for the future.
Yeah, I take this opportunity also to mention that the trade assets has come up with something really very relevant to this market, which is a number of Sharia compliant, Islamic Sharia compliant products, which have been already put on the platform, but an announcing note will be distributed to the members very shortly, and that will open up a new set of products which are very relevant to this market.
Great. Thank you very much for that. And as we're over time, thank you very much to all the panel members for joining this conversation. I hope it's been useful. Thank you very much to the audience for your time today and for all of the questions. There's a couple we didn't get to, but apologies for that. Our contact details are available through the GTR site. So if there is anything you'd like to pick up on separately, then we'd be very happy to go into that offline. But once again, thank you very much to everyone, and hopefully we can connect again soon.